As I predicted, Donald Trump winning the presidential election led to a massive buying of stocks. I was buying stocks all day. I bought over $1 million worth of stocks with good results, as all 13 of the stocks I bought went up. One of the stocks, Applovin Corporation, symbol APP, reported earnings after the market on Tuesday, and it reported wonderful earnings, and it went up. It skyrocketed 25% after the company posts surprise profit and higher revenue. Shares of Applovin Corporation jumped about 25% in the after-hours session Wednesday after the software company swung to a surprise profit and reported better than expected revenue in its second quarter, pinning the outperformance on a successful rollout of its newest advertising product. Applovin went up 2.04%, and it earned $80 million, or 22 cents a share. Analysts were only expecting 8 cents a share in the quarter, contrasting with a loss of $22 million, or 6 cents a share in the year-ago period. Revenue fell 3%. to $750 million, the company said. On a year-over-year basis, Applovin earnings rose 317% in the third quarter, while sales increased 39%. For the current quarter, the company forecasts revenue of $1.25 billion based on the midpoint of its outlook. Analysts had been looking for $1.18 billion in the fourth quarter. Applovin's software platform enables app developers to market, monetize, and analyze their apps. The company also makes mobile games such as Wordscapes, Matchington Mansion, and Game of War. We had another fantastic quarter in quarter three, Chief Executive Adam Foroughi and Chief Financial Officer Matt Stump said in a shareholder letter. Our Axon mottos continue to improve through self-learning and, more importantly this quarter, from technology enhancements by our engineering team, they said. As we continue to improve our mottos, our advertising partners are able to successfully spend at a greater scale. We're proud to be a catalyst to reinvigorating growth in our industries. Applovin's Axon technology facilitates matchmaking between advertisers and publishers. Looking at Applovin's year-to-date chart, what can you say besides wow? It's made 322% year-to-date, and that does not include the 48 points it made in the aftermarket. In the aftermarket, it went from $168 to $216. Its relative strength is 70, which, as of the end of the market today, it's not overbought. And to me, a high relative strength means that there's strong demand for the stock. Applovin's price to earnings is over 40, so that is high, but its earnings growth rate is an outrageous 52%. So this is sort of like Tesla-like statistics when Tesla was growing very fast. And I have found that when you have a hot stock, the earnings growth rate becomes much more important than the price to earnings ratio. My favorite ETF is the QQQ, which is the 100 largest companies on the NASDAQ. And the TQQQ, I day trade with that because that is the triple leveraged bullish fund on the QQQ. And looking at the chart, you can see year to date, the QQQ has made 23%, and the TQQQ has made 55%. The QQQ's relative strength is 63, so it's not overbought. which is good. So I have over 200,000 in the QQQ, and I usually day trade the TQQQ on days that it pops. I don't day trade it all the time, just days like today where I know it's going to pop, and I will put 200,000 in it approximately and grab the money and run is my strategy with that. So it's definitely a day trading and a longer term holding kind of situation for now. And speaking of Tesla, there's little economic reason to own it, but there's a big political reason to own it, and that is he helped Trump get elected. He gave $130 million to the Republicans. And I think Trump is wanting to make him part of a commission for government efficiency. He's going to have a lot of say in how agencies regulate himself and his companies. So I think betting on Tesla now is betting on it for the political reasons and believing that it's going to be favored and it's going to get favors because of the favors they have done the Republicans. But it's economically not sound, I don't think, at least right now. I mean, I made $500,000 on Tesla in the past. Okay, so I'm not against Tesla. I own a Tesla. Okay, it's trading at $288. Its value right now is $42. Its price to earnings ratio is 85, and its earnings growth rate is a negative 6%. So, it can go up just based on believing that it's going to get economic favors with its outsized influence with Trump. And that's actually a reasonable thing to think. But I tend to like to invest in things for economic reasons. And besides, Tesla is well represented in the QQQ, and so I own part of Tesla indirectly anyway. Looking at the chart, you can see year to date, Tesla has been a laggard as it has made only 16% in this very bullish year that we're experiencing. And in the last 2 months, it has come alive. It's come up from 200, and it finished Wednesday at $288. So its relative strength is 69, which is relatively good. As I say, it has caught fire because of its help to Trump's reelection as president. I feel I have an exciting portfolio now. In addition to the stocks I've discussed in this video, I own NVIDIA, symbol NVDA, NewScale Power Corporation, symbol SMR, Palantir, which has really been an excellent buy, symbol PLTR, Robinhood, whose symbol is HOOD, HOOD, Google, GOOGL is the symbol, Amazon, AMZN, Applovin, I've talked about in this video, Dell, Computer, DELL, Oracle, symbol ORCL, Reddit, which I'm excited about very much so, symbol RDDT, Vertiv Holdings, which I'm also excited about, symbol VRT. So check back and see how we're going with what I consider one of my better portfolios for a long time. Thank you very much.